Welcome, 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 everyone. Welcome to Crashes and Taxes. I am your host for this podcast, Rebecca Walser, and I'm so excited to be with you this week. And we got so much feedback from last week's Elon Musk topic that I thought, you know what? Some of the comments went in a direction I wasn't expecting. And so I thought, let's do this. Let's talk about this whole tax the rich. And, that's the solution to everything. This is the American progressive tax system that we've built, that we've all accepted. And the question is, do we accept it anymore? Is it the right answer anymore? This is what our republic is built on. And a lot of people think, oh, we have a democracy. We have a representative democracy, which is a republic, which means we don't go and vote directly. We vote directly for the president of the United States. However, we aren't voting directly for the president. We're voting for our electors at our state level, who then go to Washington, D.C. every year or every election cycle and cast their vote. And that's how we elect. So we have representative government. So it's not a pure straight democracy, but it is a representative democracy. And that brings me to some philosophy that I kind of want to touch on about democracy, because there's an inherent flaw with democracy. And I had mentioned it in passing a couple podcasts back that basically, what is the problem with the democracy? How is a democracy not going to work out for the long haul? So we have a Scottish judge and historian, Alexander Fraser. Forgive me for not maybe pronouncing the last name correctly. It's an interesting spelling, Tytler, Tytler. And he was a lord, and basically he was a professor of both Greek and Roman antiquities at the University of Edinburgh in Scotland. And this famous quote is a really good summary of why democracy is problematic. And I'm going to read this quote to you so that you can understand. A democracy is always temporary in nature. It simply cannot exist as a permanent form of government. A democracy will continue to exist up until the time that voters discover they can vote themselves generous gifts from the public treasury. From that moment on, the majority always votes for the candidates who promise the most benefits from the public treasury, with the result that every democracy will finally collapse due to loose fiscal policy, which is always followed by a dictatorship. The average age of the world's greatest civilizations from the beginning of history has been about 200 years. During those 200 years, these nations always progressed through the following sequence: from bondage to spiritual faith, from spiritual faith to great courage, from courage to liberty, from liberty to abundance, from abundance to selfishness, from selfishness to complacency, from complacency to apathy, from apathy to dependence, from dependence back into bondage. So you can see that it is a cycle that is self-fulfilling. It is a self-fulfilling, defeating cycle that puts you right back squarely into bondage. And I would challenge you to ask yourself, where is America in 2022? Where are we? What are we on the verge of? Are you seeing us having more freedoms? Are you seeing more freedom of speech? Are you seeing more ability to redress your government by protesting, potentially like in Canada? Did those protesters, were they able to peacefully assemble and protest? They weren't harming anybody? Do we see that anymore? Or do we see that we are approaching apathy into bondage back again? I will tell you, this is the most difficult 18-month period I've ever experienced since 2004 in hiring employees. It has been the most difficult job market for me in literally 18 years. It is unbelievable. It is so difficult to get a qualified person to take a job right now. Why? How? And obviously inflation is going to have an impact on that and going to potentially, make people have to start working again. But let me just read to you one of these comments that was recently. So Elon Musk sold And I'm going to give you some information about this because it's necessary to understand really what I'm talking about here. Elon Musk basically was awarded stock options, and this is going back a long time. In 2012, as part of his compensation plan, he was awarded stock options. Now, I need you to understand something. He wasn't accepting a salary or a cash bonus. His compensation was stock options, so he wasn't taking salary or cash bonus. And in 2012, his award, I'm going to give you the 2012 numbers. His award in 2012 was for 22.8 million shares at a strike at then, oh my gosh, $6.24 per share back in 2012. When he was looking at exercising these options, well, this article was written in November. The shares were trading at that time at 1,222. So basically, his gain on the shares just from 2012 was $28 billion. Now, on $28 billion, that is a tax bill. Take a guess. How much do you think Elon Musk has to pay on gains of 28,000? And I should tell you how it is classified when he exercised the gain. So let me go down here and actually explain to you how the gains were taxed. So the first thing you have to know is because this was his compensation, the stock options were his compensation, it was taxed to him as ordinary income, as an actual ordinary income. So it's an employment benefit or compensation. Therefore, it's not a capital gains situation unless you do 81B election or that's a whole different thing in tax law. But the bottom line is this is taxed as ordinary income. So basically, it would be taxed at a 37% top rate, and then you have to add to that the 3.8% net investment tax because it was securities. And then he lives in California, so he would also have to pay on top of that 13.3% California. But just the federal tax alone is literally about 42%. So on $28 billion, you're looking at almost 14 billion just off of that. And then you've got the state taxes too. So the state and federal tax rate combined is 54.1%. Now, this leads us to the question, does this really engender the ability for the entrepreneur to be an entrepreneur? Do we get to a point of taxation where we say, oh, we're not going to take the risk? The entrepreneur takes all of the risk and therefore gets the reward, So a lot of people, I remember I did a interview for ABC once, or was it CBS? I think it was CBS actually. And they had me on when this whole situation with Trump came out about, his tax issues. And, it was it was like years ago when the New York Times, 2018 now, it's coming back to me, when the New York Times had basically scooped his tax return somehow and had looked at all of these losses that he was applying towards his income. And they were, so I basically was being interviewed by CBS about it. And I was explaining that, you have to understand, and let's just take a drug company. That's the easiest company to understand. You take a drug company and their biggest expense is really R&D, right? Because the actual particles to make the drug in and of itself, it could be expensive, but maybe that's not so expensive. It's the cost is to find a drug that will interact with the body the way that you want it to interact and do what you want it to do. So much of, these big pharma is R&D, right? Well, they would never go into a business where they have to spend billions and billions on the front end to develop the cure to cancer. Let's take as an example that doesn't exist yet, or it doesn't exist in America at least. So we got the cure to cancer, and yet we have all of these. It took us, 50 years to find the cure, and we have years and years and years of research and development expenses that we need to write off as losses. And because we haven't sold our cancer drug yet, we're not turning a profit. So it's pure losses. And then literally what we do when we finally get a drug to market and we put it out there and it's now selling, $4 billion a year, we want to tax that $4 billion. But the company says, wait a minute, I didn't make $4 billion off of this. I have put in over 50 years, $100 billion. So until I get what I put in back, I don't owe the government anything. So what's going to happen is that $4 billion is going to be written down by previous losses that are going to be offset now by the income. And as we get these losses recaptured and recovered and we get to net positive, then we start paying tax, because then for the first time, we actually have generated income. You need to understand the difference between a wealth tax and an income tax. One of the tweets ironically, that I really thought was interesting regarding all of Elon and all of his Twitter stuff, someone had made the comment regarding the amount of taxes that he basically paid. And so basically, this is a comment from a user. I won't state the user's name, but basically they made the comment about the time between 2014 and 2018, Elon Musk, and they just said he paid 455, this is a tweet, 455 million, while his wealth increased almost 14 billion. That is a tax rate of around 3%. He needs to pay more. And this person actually literally put a little chart together in Excel and had a little chart attached. Again, totally do not understand the difference between a wealth tax and an income tax. So let's just assume that this person's facts are accurate. And I don't know that they are, but let's assume that between those 4 years, Elon's his wealth did go up $14 billion. I would think that it would actually be more than that, but let's just to say that is an accurate number, that it went up 14 billion. Does that mean that he generated 14 billion in actual income? No, we don't have a wealth tax in this country. In fact, we have a constitutional prescription against a wealth tax. We have the prescription against a U.S. federal government and state government taking, meaning that the government cannot take your property without giving you just compensation for it. So you can't just have wealth and think that the federal government's going to come along and give you a tax bill for that wealth. The only bill that is related to wealth is property taxes. Property taxes are a tax that they assess based on the value of the property. And you're not selling the property, and you do have to pay your property taxes every year. But if Elon Musk's wealth increased by 14 billion in a 4-year period, that's likely because of his shares of stock appreciating and going up. So if Elon Musk needs to pay tax on his $14 billion wealth appreciation over that 4-year period of time, then why can't the government come to you and say, hey, your 401k went from, 500,000 to 700,000 over the last 2 years, and we need you to pay tax on that 200,000. That's not how our country works. We don't have a wealth tax, nor will we ever under the terms of the United States Constitution and the Bill of Rights. We will not have it. So all of these proclamations by Elizabeth Warren about a wealth tax and Biden's proposals on a wealth tax, it's all subterfuge, because it is not constitutional. It will not stand without a constitutional amendment. And if I tell you how hard it was for the states of this union to pass the 16th and 17th Amendment, the 16th Amendment being a right to even tax income in the first place, that was unconstitutional until the 16th Amendment. So there's a really interesting video or list here, and I want to read to you the list of taxes that the average American pays. I want to read this to you. So let's start with this: property tax, sales tax, state income tax, marriage license fees as a tax, local school taxes, which would be in your property taxes, which are added, your property taxes, trash, whatever, but I'm going to read all these to you. Local school taxes, vehicle registration tax, business permit fees, which is a tax, estate tax, wealth management tax, waste management tax. That's the trash bill on your property taxes, cigarette tax, court taxes and fees, dog license fees, driver's license fees, garbage tax fees, gasoline taxes. Interestingly enough, the Mexican government just stopped the subsidy, or about a 50-mile radius from the United States into Mexico, because Americans were going to Mexico to buy their gas. Why? Because one, we have federal gas taxes and some state gas taxes that add how much to our dollar per gallon. So that's the question is, it's cheaper to buy gas in Mexico than it is in the United States of America because of our gas taxes. And also Mexico has a little bit of a subsidy. Gun ownership fees and taxes, gift taxes, social security taxes, unemployment taxes, fishing license tax or fee, highway toll tax fee, hotel tax, hunting license tax fee, import taxes, health insurance taxes. There is a health insurance additional tax, inheritance tax, insect control tax. That's your pest control people, your inspection fees, IRS interest and penalty charges, library tax, license plate fees, the library is, of course, on your property taxes, liquor tax, luxury tax, Medicare tax, parking meter taxes, passport tax, biodiesel fuel tax, air transportation tax. If you've ever looked at the fees that go to the federal government from an airline ticket, print out your receipt and look at the taxes that the federal government is collecting, TSA, all that. I'm not saying we don't get services. Professional licensing fees and taxes, recreational vehicle taxes, self-employment tax, sewer and water tax, service charge taxes, sports stadium tax. We add those all the time when we build them. State park entrance fee taxes, tanning taxes. You have to pay a tax if you go to a tanning bed. 911 service tax. I actually called 911 once when one of my children was choking on a liquid vitamin. I was a really new young mom, and I freaked out and called 911. I had to pay $600 for the ride to the hospital and the emergency and the ambulance. I thought, I'm not going to do that again. I guess I didn't have the best health insurance back then. That was a long time ago. Universal service fees and tire taxes. And finally, of course, the biggest one of all, the federal income tax. That's just a list of the taxes that we have. But if you think that Elon Musk paying 54% in taxes between California and the federal government makes entrepreneurs want to take the risk, I think you need to, think again. I mean, we don't want our incomes or our 401ks or our wealth management accounts to be taxed based on what we call mark to market. Mark to market is an accounting philosophy that says we will adjust our books every year based on the current fair market value. That's not really fair. Think about it. If you have a tax, if your portfolio went from 500 to 700 and you paid the tax on the additional 200, what happens if the market crashes? Does the government refund your money? Do you get your money back from paying a tax on that wealth appreciation that is all of a sudden lost? It is not a road we can go down. If we want to talk about what percentage of Americans are paying what, I don't have the numbers yet for a normalized year, but I can give you them for the last 2 years. And 2020, 40% of the bottom 40% of all Americans paid zero in federal income tax. They still had to pay their payroll tax and they still had to pay. So that's their FICA and their Social Security taxes, their Medicare and Social Security taxes. So when someone says, you didn't pay any taxes, they look at you like you're crazy. Of course, this is not my job, but I'm saying if you go to a tax preparer and you say, I paid a ton in taxes, and they're going to say, oh, you're going to get a refund. You still paid taxes because you still have to pay your payroll taxes. You still have to pay your Social Security and your Medicare taxes. You're never going to escape that no matter what you make. You will pay that. But your federal income tax is zero in 2020 if you are 40% of the lowest earners in the country, 40%. In 2021, that number jumped to 61% because of Corona. So it was a temporary situation where we had a lot more people out of work on a very hopefully short-term basis. Everything's still not back to normal, which is why 2022 is not going to be a normal year. But the bottom line is we're at about a 40% normalized rate. And then we jumped up to 61% when the country goes through a lot of problems. And then we'll get to see what the normalized and leveled out is. But ask yourself a question. If we are somewhere between 40 and 60% or 50%, let's just say that about 50% of our country doesn't pay any federal income tax. How do we sustain our republic? How do we keep it from being what that gentleman, Alexander, the Scottish professor, said it would be, which is enough people voting and people that will keep them on the public, dole, that we become bankrupt and we implode upon ourselves, which is exactly what happened to Rome between their treasuries, basically funding wars and the Roman Empire across the globe, as far as they could go back then, and their efforts to tax their citizens to pay for those war efforts, they imploded upon themselves. That's what happened to Rome. Very more complicated, but that's what happened to Rome. And I think in 2000 and oh my gosh, a long time ago, I remember doing a big, long radio interview about the parallels between the United States of America, this is probably 6 years ago now, and Rome. And we can see it now. We can see it here. We have a lot of problems in this country. And I think that this year is going to be a big change year where a lot of those things are going to be brought to the front of our consciousness. And we will be discussing them as a society and how they impact even this year's elections. It will be very interesting. We are in a year of change. And you should all prepare for that. If you're not prepared, if you don't have, a plan to deal with what's coming this year, then, make sure you take the steps to make that happen. Reach out to an advisor you trust. Have conversations that are difficult to have. contingency plans that are difficult to create, because we don't know where all of this is headed. And until we do, we have to really be protective of our dollar and our economy, because those are the things that are going to be most impacted by everything that happens in 2022, besides all the other ancillary things that are going to happen for sure. So until next week, you guys, with Crashes and Taxes, I am your host, Rebecca Walser, and I will see you then.